If you haven't watched the Oscar-nominated movie The Wolf of Wall Street yet, I highly recommend it. The deception and misleading of people is what amassed a fortune for Jordan Belfort. But the moral of the story is that he regretted it all at the end because it turned around on him. I love that movie because there are so many good lessons that retail traders can learn from. Early in the movie, there's a scene where the head of the company takes Jordan to a 5-star restaurant and teaches him about how Wall Street works and says, "I don't care if you are Warren Buffett or Jimmy Buffett. Nobody can predict where the stock market will go next." The people who say, "I make a living day trading," are misleading you because you can't day trade all the time, since time is a great variable here. In order to day trade, you'll need volatility. We have already defined volatility in the previous videos. If you haven't yet, I suggest you go and make yourself comfortable with the basic terminologies of trading. If there is volatility in the market, all professional traders will shift to a day trading approach because the big returns that otherwise could be made in 3 months can now easily be made in a week or so. Let me show you what I mean. Here, we're looking at the S&P 500 versus volatility in the year of 2018. The white line, is the S&P and swings and movements, while the yellow colored area is volatility, otherwise known as the VIX index. So, if we look at this chart, we can see in January of 2018, to be specific, the 26th of January, the S&P reached a high of 2872.87. And in only 10 days, the S&P lost 291 points and reached a low of 2581. And that was in the 8th of February of 2018. You can see here the movement of the S&P down. Meanwhile, you can also see how the volatility of the world, in otherwise stated, the world risk or the risk of portfolio in the world, have spiked and reached almost 34-ish. And then, as volatility came down, these spikes was associated with rises in the S&P. And here, it spiked and consolidated the S&P at this point. And then volatility came down until about January of 2018. Until October of 2018 actually. And here you can see that the S&P took 6 months to regain its points and move past the other high, the previous high. However, when volatility spiked again, the S&P lost a lot of points in very short periods. Right here. Again, it spiked again, and the S&P came down and reached an all-time low, which even broke the 2018 levels. Right about here. Look at how high volatility here is. Now, what I'm trying to convey here is that without this volatility, you shouldn't be day trading because you cannot make a lot of return. The S&P takes a lot of time to make a big move upward or downward if volatility is not there. But when volatility is there, very large moves in the S&P can happen, and you can take advantage of these moves and make a lot of return in very short periods of time. I'll dedicate a whole video to how to identify volatility and take advantage of it, but for now, let's just stick to day trading. Remember, I said to day trade, you need volatility. Volatility dictates your trading time frame. If you open a position when the market opens and you close the position with the aim of making profits before the market closes the same day, then you are labeled a day trader. If you hold your positions anywhere from one day to a few weeks, you are labeled a swing trader. And if you hold your positions from 1 month to several, then you are a portfolio manager. So can you be a day trader all the time? Maybe, but good luck making all the big profits that you dream of. When you decide to be a day trader all the time, you basically tell the market what you want and how to behave. This is a formula for disaster and big losses. You can't tell the market what to do. You need to learn to read the market and understand it so that you take advantage of its moves and swings. This is how professional traders trade and make money. Another factor is that when you perform a distribution of returns analysis, which I'll teach you how to do in later videos, you'll find, shockingly, that most indices, including the S&P 500, move on average 0.35% in a regular day. In addition, in order to be able to day trade, you'll need a good knowledge of technical analysis and a great fundamental analysis foundation. I'll elaborate deeply on these two essential skills in upcoming videos. In fact, I have dedicated 2 big video sections to them, so stay tuned for the exciting stuff. Lastly, there are much more that goes into day trading that the eyes can meet. You need to know how to size your positions correctly and minimize risk, because at time of high volatility, risk is high as well. We don't want you going to invest $10,000 in a single day and losing 75% of it in 12 minutes. Also, I encourage you to swing trade rather than day trade, because at times of high volatility, the market gets emotional and you could call the direction of the move right, but it might take a few days for your prediction to become a reality. And you'll need to have a good idea about momentum, moving averages, and certain chart patterns to day trade successfully. Just like when your funny friend leaves the group, nobody has anything to say. And when volatility is out of the door, professionals have nothing to do with day trading and they shift to portfolio management. I'd love to know whether you day trade all the time or have a shifting strategy implemented. Comment below and share your thoughts. Make sure you subscribe and turn the bell on so that you don't miss upcoming videos. Thank you very much for watching and looking forward to seeing you in the next video.